Welcome to Electrified. It's your host, Dylan Loomis. Quick shout out to my newest patrons, Daryl, Kirk S., and Jared. Thank you for choosing to support the channel. I'd like to kick off this Friday episode with a bit of comedy. So this Danny Moses has been on CNBC this morning, basically saying to avoid Tesla stock, not really giving any extra insight, but it's funny because at the end they asked him, well, what is he looking at? And listen to what he said.
Are there any new shorts out there that you're excited about? Or are you more inclined to be long at this point?
I'm more inclined to be long and find good cash flowing companies, don't have a lot of debt on their balance sheet, can have pricing power in this type of environment. And there always are going to be those.
So what happened here is he spent 4 minutes saying to avoid Tesla stock. He still likes this short, all of the macro headwinds, slowing demand, maybe the business isn't growing, all the stuff we keep hearing. And then to conclude, he tells investors they should be looking for companies with great free cash flow, that have minimal debt on their balance sheet, that have pricing power in this economic environment. Literally 3 of Tesla's bigger strengths. It just highlights some of the lunacy and the arguments that people are trying to make right now. We got a new Tesla stock note from Morgan Stanley. The main takeaway, they say, as Tesla sits at our bear case of 150, potentially goes below, we see an attractive entry point for investors to get involved in what we see as the clear leader in EVs. They do expect 2023 to be a tough year for legacy OEMs and pure play EV names, but they think Tesla will widen its gap to the competition as it leverages its cost leadership and vertical integration in a deflationary EV environment. Honestly, a very astute point. Lastly, due to its scale and cost leadership, lack of financial debt, and a self-funding free cash flow generation, boy, does this sound familiar, we see Tesla as a relatively lower risk vis-a-vis other EV pure plays, as well as EV efforts of legacy OEMs. Essentially what myself and Jason DeBolt have been saying, not financial advice, but please show me a better risk-adjusted investment over the next 5 to 10 years. I'll wait. This storyline many of us have been talking about now is getting louder. Cathie Wood says ARK has been concerned about the impact of declining residual values on the $1 trillion plus auto loan market. Most of these loans back gas-powered vehicles. Cathie shared this tweet and the highlight, I'm now convinced there's a massive wave of car repossessions coming in 2023. Full thread will be linked below, but the short takeaway is this. As car prices over the last 2 years went up dramatically after the pandemic and all of that free money time, basically customers bought vehicles that were very expensive and they took out bigger loans, but now the residual value of these vehicles is plummeting, leaving a lot of these customers underwater, meaning they owe more on their vehicles than they're currently worth. So not only were the loan to value ratios much higher in the neighborhood of 120 compared to maybe 70 or 80 in a healthier environment, but they were actually writing these auto loans for much longer. Instead of a standard 4 or 5 years, they were pushed out in some cases to 84 months. Lucky Lopez did a great video on this subject. I'll just give you the main takeaway, but some important context first. If you don't know, these auto loans are bundled into assets essentially, similar to how mortgages were handled back in 2008. And then those assets are then bought, sold, and traded between the auto loan banking industry. Now, since some of the paper or these assets that these banks have bundled together, because they're not looking as good as they did a few years ago, meaning a lot of them are underwater, they have basically stopped buying them altogether. So here's what that means.
I've been doing this for a long time. Even back in 2008, like I said, they were still buying auto loan paper. As of right now, they are not. They completely stopped. Now, there are banks out there that are purchasing, but a lot of the ones that I deal with that have been buying for a long time have stopped. So what does this mean for the auto lending industry? What it means is if these banks can't buy new paper and their books start to look bad, they're not going to be able to lend as much money as what they normally can. They have to get conservative. They have to balance out their books. So how do they do this? Well, they're going to lend lower amounts of money on cars. They're going to ask for bigger down payments, and they're going to ask for more qualifications. So you got to have maybe more time on the job, more income, higher credit score. So this is going to be a credit crunch, and it's going to slowly be a noose tightening around the economy when it comes to the car market. So as these dealers, remember we talked in the last video why they can't lower prices, they're still trying to get these over retail prices where you see the banks are hurting. They can't financially afford to give dealers 120, 130% LTV. So now they're going to start doing maybe 100%, 90%, 80% of LTV. And these dealers are going to have to get these massive down payments because they're up here. They need to come where the bank's at. But the only thing that's going to do that is a massive down payment, which people do not have right now because of the current state of the economy. So this is why not only are we going to have prices dropping when it comes to the car lot market because of how the flow of repos are coming in, but also as the lending starts pulling down, it's going to drive it down even more. If you guys remember back when 2008, when they started changing all these housing laws where if you wanted to apply for a home loan, you had to have a certain amount of credit, certain amount of job time, W-2s, blah, blah, blah. You do not want the government to step in and regulate auto lending.
And don't forget, Kathy said most of these loans back gas-powered vehicles. And there's a whole nother part of this story. Remember, a lot of these OEMs have very big financing arms where they make a decent amount of their money. But that business is heavily reliant on the residual value of these vehicles. So as those residual values decrease and we see more repossessions and lower pricing of vehicles, it's going to lead to a host of issues. To which Elon said today, potentially the biggest financial crisis ever. This right here is a massive statement and why this topic really does deserve a video of its own. So just know it's on my to-do list and it may be on a different platform. And probably not the one you're thinking. In response to that prior thread from Guy Dealership where he said he's convinced there's a massive wave of car repossessions coming in 2023, Elon said a good prediction. And when these consumers that are underwater with their auto vehicles then try to trade it in or sell it to a dealership, the dealership makes that customer pay a bunch of cash up front to try to make up that difference, but in a lot of cases the customer won't have those funds. So those consumers can't sell their current car, which means they most likely can't buy a new car, which hurts the consumer, it hurts the dealership, and then it turns into this vicious downward spiral. Many of us have known there is going to be pain ahead, especially for combustion engine OEMs, and maybe that starts happening more in volume in 2023. We get some exciting news from Drive Tesla Canada and Joe Tetmeyer. Finally, from a drone video, we can see some parts of the 9,000-ton Gigapress have indeed been delivered to Giga Austin. Clearly nothing is set up or operational. It's going to be a few weeks, if not months, but this is a very good sign. Of course, you have the EDRA label here, and then over here it looks like some of the red parts of the press, which seems to be these pieces right here. So I'm assuming they'll continue to receive parts of this press in the coming weeks. Now I've heard, don't take this as gospel, but it may take in the neighborhood of 3 months once all of the pieces are on site to actually construct it and then begin to do the testing. That would take us toward the end of Q1 and then doing some testing into Q2 and maybe some early production as soon as the end of Q2 or into Q3. That may feel a bit optimistic because there will undoubtedly be unexpected things that come up, but it's a timeline that we'll hope for. If you haven't seen it, it's worth at least checking out this new creation for the Cybertruck. Of course, it's a prototype because the Cybertruck isn't even finalized, but this is from Space Campers, basically a camping unit built for the Cybertruck. Seamless installation, no modifications needed to the Cybertruck, full access to the truck bed when open or closed, air-powered actuators that open or break down the camper with the flip of a switch, keyless entry by integrating with the Cybertruck's tailgate locking mechanism, Murphy-style bed that sleeps to and flips for up to 8 feet of standing room, and compatible with the Cybertruck's battery for accessory add-ons and DIY builds. There, of course, are many different accessories, and they're talking about some kitchenware and a sink and things like that, which may remind you of Cyberlander, another project similar to this. Now, of course, I'll say usually with these prototypes and the marketing, everything looks amazing and there's a ton of features, but when it comes down to production, sometimes they have to pare that back, but just wanted to throw it out there and could be something to have on your radar. Because yeah, I won't lie, the marketing looks pretty good and it would be awesome to have something like this in the real world. When it comes to the much anticipated FSD version 11, the single stack we've all been talking about, Elon said next week. If you're not familiar with the single stack nomenclature, right now there's an autopilot production version or neural net that essentially operates Tesla's highway driving, and then there's a separate neural net or part of the stack that operates for Tesla's city street driving, what we know as FSD Beta. This single stack version 11 is supposed to merge the two and basically only use the FSD Beta city street driving stack neural network on the highway. It was cool to see this from Eric on Twitter, had his first Zoom call in his Tesla car, saying the experience is awesome. As far as we can tell, it looks pretty decent. Would love to hear some audio, but I'm sure we'll get video soon enough. No surprise, but for the end of Q4 push, Tesla is offering some new incentives in different parts of Europe, anywhere between 2,000 and 4,000 euro. DTC is saying these incentives are for anybody buying a Model 3 or Model Y from inventory. On that note from yesterday, when I was talking about the $3,750 credit in the US, I said it was only for inventory vehicles. A few of you commented and said you actually were able to get that incentive on new vehicles too, so I wanted to pass that along. Tesla has, of course, led the way to record EV sales in Germany in 2022, and due to this higher demand, this has pushed the government to invest an additional $1.9 billion into charging infrastructure in the area. Tesla led EV sales in Germany with a total of 52.4 thousand units sold in 2022 so far, followed closely by VW with 46.4 thousand. Overall, full BEVs represented 15.7% of the market, and alternative drive vehicles like hybrids and hydrogen averaged 47% market share throughout 2022. This new spending package throughout Germany should create 8,500 new high-power charging points, said to be built and operated by various charging infrastructure companies. A few different places were talking about Project Highland today, just saying that this Model 3 refresh has likely been going on for 6 months already. This should come as no surprise. Tesla is constantly working on new products and making changes and revisions. So, according to some digging through some filings, it looks like Tesla's been working on this now since earlier this summer. Al Root shared a pretty interesting chart saying that Tesla is generating about 15% of the total free cash flow of the entire auto industry. This data is basically highlighting the challenges of running an auto business, especially when you compare it to companies like Apple. But here's that stat we were talking about. 2023 expected free cash flow in billions. For the entire auto industry, that number is 95 billion. Toyota said to make up around 11% and Tesla making up 15% of that. Then Apple's free cash flow expected for next year is greater than the entire automotive industry. And of course, all year we've been talking about Tesla's operating margins being much higher than the rest of the industry, so not really anything new here. So don't forget, Tesla still has massive potential when it comes to FSD revenue. That's very high margin, if not 100%. And everything that they can do with software as a service and in-car purchases as the fleet continues to grow and more developers are incentivized to build things specifically for in-car use. And maybe the best part highlighting Tesla's insane operating efficiency, Tesla is going to do this free cash flow number greater than Toyota's in 2023, again expectations, on almost 1/10 of the vehicles delivered compared to Toyota. When it comes to Giga Shanghai, Troy has been saying for a few weeks he's not expecting any exports from Tesla in the month of December. But I said yesterday that there's at least a non-zero chance that we do get a surprise export number in December. And then we have this tweet from Wuwa as of yesterday, the last batch of Tesla exported this year gathered in Shanghai. I guess there's a chance they don't make it out in time or something like that, but Wuwa did confirm that these are for export to the EU. Nice job by Rivian because the R1T just got an OTA update that gives it 14 miles more range, taking it now to 328 miles from 314 previously. The R1S also got a boost of 5 miles. Specifically, this is the R1T quad motor all-wheel drive variant with the large pack and 21-inch wheels. A quick update on the latest Tesla racial discrimination case. Basically, Marcus Vaughn has been trying to turn this into a class action lawsuit against Tesla, trying to add more than 100 other workers to this lawsuit from 2017. Tesla, on the other hand, has been trying to block that, trying to get him to arbitrate privately, but a 3-judge panel issued a tentative ruling rejecting Tesla's arguments. Too early to say where this is all headed, but I think it's very interesting. You may recall that $137 million verdict that was issued last year against Tesla that was challenged, and they're going back to court for it. Well, the same lawyers from that case also represent Marcus Vaughn in this case. Here we get more confirmation Toyota is all over the map when it comes to EVs. They just announced a collaboration with Encore to accelerate EV charging, and they're actually doing research for vehicle-to-grid. These two companies will collaborate on a pilot project for V2G. Initially, the two companies have agreed to a research project that will use Encore's research and testing microgrid in South Dallas, and they plan to use a BEV, without saying which one, along with the system to better understand the interconnectivity between BEVs and utilities. It might make sense for Toyota to sell a few full BEVs before working on vehicle-to-grid, but just one man's opinion. That'll do it for today. Hope you all have a wonderful and a safe weekend. Please like the video if you did, and a huge thank you to all of my Patreon supporters. I'll see some of you soon.